Chartmaster. That's going to be Rick Ducat. Rick, welcome to the show. This is a good segment, I think. We love Folio, but I kind of wanted to discuss Google Alphabet just because it's gone so high so far this year, hitting all-time highs. What are you seeing on the technicals? Can this run continue? Because it's like any of the other Magnificent Seven, they continue to move to the upside.
You know, Tom, that's one of the tricky parts of trading, because just because something is high doesn't mean it can't keep going higher. So when you're in this situation where you're finding a stock is at all-time highs, you might be tempted to say, okay, we're due for some kind of pullback here, but it could continue. You could get burned pretty badly here. So there's some tricks we can use to try to assess this move here. So when we start looking at the chart here, we can see, for starters, that we have cleared above that previous resistance area, that green line representing our old highs there, and we have cleared above all three of our moving averages. We've far outpaced them. Our yellow 21-day, orange 63-day, purple 252-day exponential moving averages, we've left them in the dust. We're just moving beyond this level now. However, I have some question marks about this chart right now. You may see on the chart we've got that thick, solid blue line. That's our linear regression line, our line of best fit based on closing prices for the year. From there, we can use standard deviation channels, which are one standard deviation to the upside and the downside to create those channels. Those are our yellow lines there. Then the +2 would be our orange lines to the upside and the downside as well. So you may notice now we are right on the money near that +1 standard deviation channel. So this could be a potential resistance area that price needs to work through before we can continue. This could be a consolidation point or even a reversal point. And I'm not saying that's guaranteed to play out. These aren't a crystal ball that tells you exactly what price is going to do. Rather, based on our own price history, we can tell that price is already at a relatively extreme point based on this study here. So when we couple that with looking at the RSI, our measure of momentum, we can see that momentum is actually trending downward for quite a while here. And we can see that there's a little bit of bearish divergence here. We have the point where the RSI was at during our last peak in price. You can see that line extends to the downside now. We're at a lower point now. So that tells us that momentum is waning. The pace of the gains is slowing down. Does that mean we're due for some kind of crash or something? Absolutely not. That's not really what we're saying here. What we are saying, though, is like I said, the rate of growth is starting to slow a little bit. When you couple that with the fact that we're near a potential resistance point, that could be, a sign that we could be in for some kind of slowdown or consolidation here, Tom.
Hey, Rick, quick question here. When you look from technical analysis basis, right, as a trader, how do you deal with, and Google Alphabet is our example today, but we could use this on a lot of names, frankly, in the S&P 500. How do you look at the distance from the 200 and the 50-day moving average, and when do you get worried? Is there a level? Is there a percentage above? When do you start to get concerned about how far so many of these names are away from their moving averages?
That is a key sign that you can look for. The distance from these commonly followed moving averages can be a clue that price is perhaps getting a little overextended at this point. Now, off the top of my head, I'm not sure what the percentage is that we're away from that 200-day simple moving average here, but that's worth noting, especially when you are in a situation where you're moving above all these moving averages. It may make sense to look at a shorter-term moving average, perhaps like the 9-day exponential moving average. The exponential moving average reduces some of the lag that's inherent in these types of studies here because it gives greater weight to the recent price action here. So you may consider using a shorter term moving average to give you some idea of where you might find a supportive area or a buying opportunity, or also a threshold for which it could go below, and that could be the sign of trend change here. So if you do look at this, though, I've got our 252-day EMA in purple there. We're quite far above it at this point. Price has, as I said, far outpaced these longer-term moving averages here. So that would be perhaps one way you could look at this. Look for the shorter-term moving averages for price to break below them and for the moving averages themselves to start to turn downward here. So that would be a sign of, once again, potential trend change.
Yeah, Rick, I noticed that, especially that RSI, the trend that you had on there, peaked out about 79 in January, then 74 in April, 72 in May, now at about 68, 69 level right now. So that trend, if it continues and holds, this could be a potential top, right?
Yeah, and that's another good point to make here because we've repeatedly had trouble with the RSI trying to push above that 70 level, which represents the overbought area. A move above the overbought area in a trending market is typically regarded as a sign of strength. So that would be a bullish sign, price kind of going into overdrive there. So the fact that it's failed repeatedly to cross above that level is another reason why you could make the argument that perhaps we are due for a little bit of consolidation or perhaps even a pullback.
Yeah, in the overall market too, because we've got some RSIs that are elevated in the S&P 500 and NASDAQ also. Great stuff. Thanks to our chart master, that's Rick Ducat, for joining us breaking down Google Alphabet.